Index investing or passive investing has grown more popular with investors. Even Warren Buffett touts the benefits of owning an entire index like the S&P 500 over the long term. Check out BMO's S&P 500 Index ETF, ticker ZSP, the largest ETF in Canada that tracks this well-recognized and popular index. ZSP provides exposure to the returns of the market cap-weighted S&P 500 Index at a low cost with a management fee of just 0.08%. This broad market ETF makes for an efficient building block in a portfolio, saving you time and effort. Investing in a broad basket of stocks tracking the whole market also provides diversification and mitigates single stock risk and lower overall volatility. Commissions, management fees, and expenses all may be associated with investments in exchange-traded funds. Please read the ETF facts or prospectus of the BMO ETFs before investing. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to the Loonie Hour, episode 108. As always, joined by the three amigos. We got Rich Diaz of PGM Global, Keith Dicker of IceCap Asset Management. Welcome back to the show, gentlemen.
Hello.
Rich, what's going on, buddy?
I always go first. How come you're jumping over to Rich?
Well, Lions guy's breathing on his shoulder.
I know. What do you got, Rich? Come on, spill the beans.
Oh, nothing. I actually have a really good story. I went on a date last night, and I went met her.
Louder.
I met on a date last night, and I met a girl. She was great. We had a lovely date, and we agreed to meet each other again. And then she gave me her phone number, and then I think I wrote it wrong in my phone. So I actually don't know this girl's phone number. I don't know how to get in touch with her.
Did you write it wrong, or did she give you the wrong number?
I think I wrote it wrong because we had a great date. It was lovely. So,
Where did you meet? Where'd you guys go?
we went to just like a local pub, which is a great spot called Hurley's. Really, really good spot if you know it. Oh yeah, I was supposed to give a shout out to a restaurant that I'm supposed to, but I forgot the name of the restaurant that I went to. But anyway, Keith, I'm all over the place. You save me, please.
So I guess the theme, like last week, I think the theme was that the shitter's full. The theme this week is Rich is forgetting everything. You can't remember her name. You can't remember the shout out, the name of the pub. That's good though, Rich. Well done. How are you going to reconnect then? How are you going to find this person?
Message in a bottle.
Yeah, message in a bottle. No, I'm gonna jump back onto the apps and see if she forgive me for forgetting her number, but we'll see. Stay tuned.
Twitter, the Twitter app, the X.
Yeah, you found her on Twitter?
No, I don't think so. I don't think she's on that. It's only the weirdos who are on Twitter now. I think weirdos and propagandists.
That's why I'm on there, baby.
That's right.
I fit in.
We
had a big week going this week. We've had a lot of, central bank stuff came out. Canada came out with information. So I got a bit of, skipping my step this week. Because, we talk about the path where everything is going economically. And it seems like we continue to go down that path. So I'm sure we'll jump a bit more into it today.
Yeah. We've got like a long lineup of things here. So we've got housing data that just came out for October. We'll walk you through that, sort of what we're seeing. We got some hot button things going on around the carbon tax here in Canada, consumer confidence numbers, the Fed, the Bank of England. It's been a pretty busy week here. So, but wanted to frame it up here before we really jump into the show. Keith is reminding me that we need to promote the live event in Toronto on November the 30th. So again, we've had people that listen to the show and then they'll still email us being like, how do I get tickets? The tickets are in the show notes. Okay. So if you're on Spotify or Apple on YouTube, you just click on the description, click the podcast. There's going to be a link that's going to say link to tickets. Just click that, check it out. We'll see you on November 30th. But let's get into this.
And can we say that we're going to have a special musical guest, which is going to be really fun, actually.
Right. We are going to have a musical guest. It'll blow your socks off. So
that's right.
It's going to be fun. I think the music is going to be great. But with the tickets, though, if you're not able to find it in the link, you can just email one of us as well, and we'll send that along to you.
After I
But
just told people not to email us. Thank you.
you
No, my
did.
DMs are open. You can message me on Twitter. There you go. How about that? Don't
Yeah, I
message
was.
Steve. Steve's busy. Message me and Keith
Really
instead.
just sending everybody all over the place. Anyways, there's a link in the show notes. But we'll dive into this week's episode. We got some, everyone's kind of watching here with bated breath on the Canadian housing market, waiting to see how things are going to shape up. So we've got some of the statistics coming out here for Vancouver and Toronto, of course, the two largest, housing markets in Canada. So in Vancouver, home sales were abysmal. It's just over 1,900 home sales, the lowest basically since you'd have to go back to like 2008, 2009. And then last year we're like a couple percentage points above that. So horrible numbers there. In the GTA, it's much of the same story. So sub 5,000 home sales in the GTA over the past 20 years, this has only happened two other times. It was basically during the COVID outbreak and the GFC, the global financial crisis. So just to give you kind of an idea, we've got home sale activity kind of running more or less around crisis type of levels. And
well, we're in a crisis.
We are in a technical recession now.
Yeah, but it's not a crisis in terms of, financial markets are getting, knocked around with dramatic movements, right? But
no,
it
but we're
is
in
a
a housing crisis. We're in a housing crisis. And what's the peak to trough decline in Toronto house prices? Roughly, Steve?
I mean, it dropped, then bounced back, and now it's dropping again. So to me, it feels safe to say that you're down 10 to 15% from the peak. Yeah. But then, there's like other areas, these suburban markets that are highly levered, Brampton, that, are down 20+%. So
but there's more. It's worse than that, though. In some cases, I mean, I keep seeing there's a guy on Twitter, I forget his name is, but he always puts these pictures of before and afters, right? With the MLS listing and the numbers. Is that bogus?
Yeah, those are kind of finding like extreme examples. It's like, I think at the end of the day, you kind of have to look at the index and say, okay, what's the index showing you? Because like you can always point out the odd sale where some guy panicked and undersold and grossly overpaid at the top. Like it's
right.
Okay.
That's like people talking about their all-star stock picks all the time. They're always amazing. The bottom and the top and everything else you just forget.
Yeah. So, well, I mean, yeah, but we are in a technical recession now. StatsCan, of course, came out with a preliminary estimate for September GDP. And so that was flat. So the official reading for Q3 is a negative print. So back-to-back quarters of negative GDP in Canada. So
it's fine. It's fine. I love that meme. The meme with the dog in the house and he's drinking the coffee and there's all the flames everywhere and it's a little bubble and it says it's fine. I feel like that's what Canada.
Well, because we've been talking about it, and this has been our expectation, and we've but to get to a more serious decline, you have to hit the decline first. You just don't go from you're growing to it just happens, very suddenly. So that trend has not changed, everyone. And today, hey, we haven't said this for a long time, but today's Thursday. We record on Thursdays and we push it out on Fridays. But ever since the Fed meeting yesterday, financial markets have been what we call risk on. So, it's been green everywhere, and the dollar is mullered, for a change. That's happening. But I think we need to connect all of this together, because one conversation that I have, it's too frequently sometimes with investors across the country, in that they're invested very heavily invested in bank stocks and the bond market or preferred shares, and they've already started experiencing a slowdown in household income for whatever reason. And it's harder to pay their mortgage because they've all been on variable rate, and their investment portfolios are down 10-15% over the last couple of years. So this, you see, you used the word crisis there a few minutes ago right into the housing market. I think people do appreciate everything is linked together here. It's you follow the ball, bing, bing, bing. And the next thing we have to see now, maybe we do get a soft landing, Rich. Maybe thing becomes nice and as bland as the wall behind you there. But and that's fine. Maybe we go up. What do you think?
I think that that's not going to happen. I think that one thing we should reiterate is the per capita GDP numbers. So if we're flat, basically on a real basis, and probably slightly up in nominal terms, that real GDP number is going to continue to contract. So I mean, remember, we're basically below the 2018-19 peak. So this is
18,
basically, yeah, I can't remember if it's Q4 of 2018. Anyways, whatever. So it's a long time now. It's what, 5 years? I can do that math pretty well. It's 5 years basically where we're all either getting poorer or less well off, and now it's starting to contract in real terms. I mean, like, sorry, I'm getting ahead of myself. I'll assume the next quarter will be a full-on contraction. But on a per capita basis, I mean, it's just an scathing indictment on our economy. And I think, just stepping back a second, I think then linking it to the housing, this is what what happens when you have a housing bubble burst. I think it's whether it's Ireland, Spain, whether it's in the US, when you have that kind of money flow into, in my view, a non-productive asset. Sorry, Steve. When you have ownership transfer costs be 2-3% of GDP, when you have residential gross fixed capital formation hit almost 10%, I think it was 11% at the peak. Just to remember to compare it to Ireland and Spain, we got into 12s and whatever. In the US, I think it was 8 or 9. But when you have that deflate and people basically stop allocating to that, and you have banks start to curtail their credit growth, there's just always pain. So I don't think Canada's going to be any different. Keith, I think
just to
wraps it up.
Yeah, just to expand on the housing side of it, I kind of just like, briefly touch on sales figures, and people are like, well, what does that really mean? Like, what's actually happening in the housing market? And I can just tell you, like, anecdotally, what we're seeing is basically a lot of stuff's just not selling, sitting quiet, very little showings. Sure, the odd good house is move-in ready that's still selling at a fairly good price, but there's a lot of stuff that's just like going no bid. And of course, that doesn't show up in like your price index or your median sales price, and so, it doesn't necessarily show up in the data. And so, but I think what you're seeing right now is a market that really has very little liquidity right now. Like, if you actually want to sell, like, you got to hammer your price. And again, most sellers are not prepared to do that.
Is that really happening in Vancouver now? So, like, if you in a nice desired neighborhood, you got to lower.
It's a tough market. And again, like I said, if you've got a move-in ready entry level house, yeah, you're gonna still sell it relatively quickly and at a reasonable price, because those are still just so in demand. But in general, there's large pockets of the market that I would say are not performing well at all.
Steve, you have relationships with brokers, right? So, like, what is their attitude? Like, are they tightening the lending standards as well, or is the interest rate doing all the work for them? Or is it that people, I mean, we haven't really had job losses, which is why I would be hesitant to call this a technical recession. Employment is relatively strong in Canada still. Wage growth is okay, etc. But is it the tightening of the lending standards from the bank side, or is it the interest rates that make it unaffordable?
Yeah, I mean, you can still get a mortgage. Like, it's not like banks like, oh, we're not going to lend you money. It's just like, banks are still, I think, happy to extend credit. The problem is you got to pass a stress test at 8%, which just bumps down people's ability to what they can borrow. And I think people just aren't, I think the bigger driver is like, we're seeing people coming up with larger down payments to sort of offset the cost of the mortgage. But the biggest thing is there's no urgency, right? If people are like, well, if the new rate is 6% and this is all I can afford and this is really unaffordable, I'm going to wait for prices to come down. And so people are just, people are just happy to take their time. There's no sense of urgency. And so that's kind of what we're seeing. I mean, I can tell you, like, I still think there's, a decent amount of dominoes that could fall. I mean, I know, again, I'm not going to get into specific names, but I think there's a few, developers and stuff in town here that are in tough, and they are starting to try to liquidate sites and starting having issues paying some trades. And like, you can see it's happening. I mean, if you think about it, we've only really been raising rates. It hasn't even been 2 years. So if you look at it, let's say you're a highly levered real estate developer, you're typically looking at floating rates or very short-term debt. Like you can kind of stomach it, right? Like you can stomach rising rates for 12 months, 15 months, 18 months, but like it's kind of like it just like the debt and the interest rates, they just start compounding. And at some point you're just like, this isn't working anymore. And it comes to a head. So I think we're kind of like, it still feels like you have to put things into context that really rates, like they stopped going up. What, the Bank of Canada's last hike was in what, July?
Yeah.
So it's like like it really hasn't been that long in this rising rate environment. So I think that the bodies are starting to kind of stack up, but like those aren't going to come public for many, many months.
Can I ask one more question? Sorry, Keith, before we jump in, or just like there's some pushback on the idea that sorry, switching gears, but still about the housing market. There's some pushback on the idea that there isn't enough housing. So people say, oh, it's not about the housing supply, or there aren't enough houses or whatever it is. But it's really about investor and investor demand, and the fact that investors bought a lot of these homes and bought a lot of the rental units, et cetera, et cetera. Does that make sense to you as like a theory or a hypothesis of why house prices are so unaffordable, and that there's just no supply, or there's no access to that, or no inventory, et cetera?
Yeah. I mean, I think that's a good point. Like, I think you've brought up like obviously a very hot button topic, but it is important because I think there's a lot of like myths, and I don't think there's like I don't think it's like, let's put it this way. There's not a clean answer. Like it is or it isn't. Like, yes, investors are influencing the housing market. 100%. Like, yes, of course they're pushing prices up. I don't think that investors are the sole reason that the housing market is unaffordable. Like, I mean, look at rents. Rents are still rising. I think you do have a structural undersupply of housing in this country. When you add 1 million people a year, it's pretty hard to build to that capacity. You don't have the trades, you don't have the labor, you don't have the ability to supply that market. So I do think, yes, investors, now you're seeing like, Trudeau out this week saying, oh yeah, the investors are to blame now. It's like, nobody's looking inwards. Everyone's just looking for the scapegoat. It's like, well, what about you? Like, what about your reckless policy? What about the Bank of Canada's reckless policy of zero interest rates for 10 plus years? Like, everyone's just looking for the scapegoat. Right now, we just like banned Airbnb. Now we're going after the investors. We used to go after the foreign buyers. Nobody's taking any accountability. I mean, 1/3 of the Liberal cabinet owns investment properties. Hello.
Wait, I have a question though, because sorry, one last thing, I promise. But so the Airbnb stuff I get, if you have, it's like just an underutilized asset, right? If you own an Airbnb and you rent it out, it might be empty, let's say 20 days out of the year, but you make enough money in the 10 days to pay the mortgage, pay whatever, the condo fees, etc. I get all that. But if you're an investor and you own a multifamily unit, let's say 20 apartments or 5 apartments or 100 or whatever, you want to do everything in your power to increase the occupancy rate of that property. So I don't get how investors being in the market should increase or decrease supply of literal units. So I don't know.
I think people just get confused. Like, people are just like, an investor bad. Like,
well, investors don't buy the house and leave it empty is my point. That's dumb. They want people in there.
True. I mean, like, people are like, so there's a bunch of stats going around right now from Stats Can saying, I think it was like something like over 50% of newer condos in Toronto are owned by investors. I don't know the exact stat. It's a really high number. People are like, whoa, that's crazy. And like, yeah, it is. But like, if you think about how does new supply in Canada get to market, the model is pre-sale, which is highly speculative, and you're paying like 20% above spot resale prices, right? So you're buying a futures contract, which is marked up above the resale price today, because it's not going to be completed for 4 years. So it's a speculative asset. And who's the buyer for that speculative asset? It is investors. And so investors are the ones responsible for bringing new supply to the market. Like, that's how, and again, you can say, well, we should have a better system. Maybe we should, but like, good luck changing that.
but it doesn't address the excess demand. Anyway, we're going on too long on this.
Yeah.
But
Anyways, I think we're going on a tangent here. But anyways, long story short, housing market sucking wind. GDP is now, we're in official recession. When you adjust for population growth, real GDP per capita is obviously horrendous. And I think the outlook, Keith, for Q4 doesn't look any better.
I think, I think we just need to remind everyone I guess the springboard that created this mess over the last few years, again, was the policy response to the pandemic. A lot of money got gushed into the system at both the fiscal level and central bank level. The Canadians did it, the Americans did it, the Japanese, the Australians, French, British, Germans, Swedes, you name it, everyone did it. I mean, so like if they're trying to find, like you said, like, okay, who's responsible for this happening? Like you said, Steve, you just got to look in the mirror. They are responsible for it. And then I mentioned earlier, about maybe 5 minutes ago, when all that money goes into the system, it pushes all these financial assets up higher as well. So you get like the house prices, or hard assets, people might call that, real assets are going higher, financial markets are going higher. And then that stimulus holds, the flow starts to slow dramatically. And then everything, sort of financial markets are coming down. Like, again, you've got the peak in Canadian bank stocks. It's, some of them are down. What are they down, Rich? Maybe 20, 35% for some of them. We won't name specific names, of course, but.
Well, like there's an ETF that's like an equally weighted ETF, and that's down 25%.
Yeah, from its peak. Yeah. And if you look at the bond funds, any of the big bond funds,
they're down 50.
They're down,
right?
yeah, depending on what you're looking at there. So, and then the house prices are down, and the economy is getting tighter and tighter. And we talk about global risk is synchronized. This is it. And I hate to be the bearer of good news or bad news, depending on which side you're on this. Again, we always share with people, as investment managers, we can be pretty insensitive. And what we mean by that, not calling, Steve a jerk or anything. And that's just factual sometimes, right, Steve?
Ouch.
But yeah, ouch. I didn't pick on Rich that time. I get a suggestion,
I like this.
Yeah. People will start doing that from now on. But, from a money management perspective, if you're seeing this correctly, you can see that there are some really great opportunities coming up here. Unfortunately, these opportunities are going to be created because the masses out there are going to get mullered with what potentially could happen next. It doesn't mean like people in the Twitter world, they'll say, oh, well, you said this was going to happen, or this was the top or the bottom and all that stuff. No, professionals don't work that way. It's a probability game. If the probability of a risk event has increased, you have to be prepared for it. And that risk event that we've been talking about is that we start to see a slowdown in the economy, which then really accelerates into something bad. So that slowdown has now started. That's been confirmed. And if this does accelerate to the downside, it's going to affect housing markets. People that have been dependent on, certain parts of the equity markets to pay them, things like that. Again, this is what policymakers put in motion, and unfortunately, they have to let it play out, right? That's the way it works. So it's just, I'm not the bearer of awesome news for a lot of people here right now. However, if you are following the podcast, this is consistent. I think we are being consistent.
I think so too.
And yeah, so maybe this does stabilize and things are fine, but again, like it is set up here right now for some further downside risk with the economy and everything else.
Yeah, just to chime in there, because people are like, everyone's always pontificating about housing and the outlook and what's going to happen. And, we're still sitting at 6% mortgage rates, of course. But, the one way to get mortgage rates down, which I think is needed to relieve a lot of the stress on homeowners and again, levered developers, one of the only ways to get rates down, of course, is to have weaker economic growth, less demand in the economy, and ultimately a deeper recession, which deep recessions aren't really bullish for housing either. So it is a bit of a catch-22 situation. So it's a really tough spot, obviously, as let's say a policymaker like Tiff Macklem, that's going to have to sort of juggle this.
But one thing a recession does, remember, if you're a capitalist, which I am, and most people are if you live in this part of the world, that's why we have business cycles. A normal business cycle, it will, once it reaches its peak, it'll roll over, and then it flushes out bad investments that have taken place. So in the housing world, that's people stacking up, to build an Airbnb army of rooms or doors. You guys call it doors sometimes, don't you, Steve? Is that what you call it?
What? Well, like, how many doors do you have? That's like kind of like the US thing.
Is that, do people actually say that? Is that like the real estate
kind of a US thing where it's like these guys that'll brag about like, I got 73 doors. And it's like, okay, well, you own 8% of those 73 doors. But
that sounds like the stripper from The Big Short.
Now the stripper is about how many Airbnb arbitrage you have.
Yeah, that's right. That was a great movie.
Was that the restaurant you went to the other night? The Big Short? Was that? No.
What?
But I mean,
that wasn't very funny. You know what's happening now with the recession? My jokes are getting really bad.
No.
We're in for a downturn, guys. We need to turn.
That was a good joke. That was a good joke.
Keith, that is a good point, though. Like, I can tell you, like, just being like obviously deep in the weeds of the Vancouver market, just seeing a lot of the malinvestment in real estate, just like some of the really, really dumb purchases, not only like some households have made, but like a lot of these developers just like speculating on land and just paying outrageous dollars and nothing pencils, but they're going to hope the market rise. Like, it's just like, wow, these people, like, they do need to get flushed out. And it does need to be like a humbling lesson. So I certainly agree. And I think that's a valid point. But speaking of consistent, we've also been pretty consistent, Rich, on our discussions around, first of all, GDP and our views that was going to soften. But we've also been pretty consistent around the immigration file. And so I don't know if the Liberal government's been tuning into the Loonie Hour, but they
definitely do.
Pretty big announcements here in the last couple days.
Yeah, well, I think it's, we'll see how this exactly plays out. The announcement basically is I think it's two parts. One is to concede that is an issue, and that you, in some ways, you have to kind of, so what it is that they're basically going to cut the immigration levels, or to say keep them at current levels and not increase them, I think, until 2026. Is that right, Steve? I can't remember the exact.
Yeah, so they're permanent residency targets. So they're keeping those the same, which is, I think, 500,000 people by 2025. That's just for permanent residencies. And they're saying, well, we're gonna stop raising the target in 2026. So after you reelect us in 2025, we will promise to hold the target in 2026.
So there's two parts there. One is that they're, I think, rightly, as the leaders of a democratic nation, reacting to what people are expressing, which is, the polls, which they're not happy with what's going on. And it's not so much the immigration specifically, it's that it's having no housing plan and the knock-on effects that necessarily has. I think that it's very important to make those clear. But the thing is, I reserve my judgment. I don't believe them, frankly. And I know it's kind of unfair because, like I said, they are reacting to the polls and to what we've identified as an issue when it comes to a lot of problems Canada has. But, there are some wrinkles in there, which is the temporary workers thing, which, I think Ben Rabideau, he explained quite clearly, which is, they don't necessarily count, I think, in the same way. But then once you're here, then it's quite easy to turn that into a PR and then, or a job, and then Canadian citizenship. And, it's not clear that the international students piece has been dealt with. And so we'll see. I think it's important to just, reserve judgment, and we'll see what the numbers give us.
So here's a quote from Mark Miller, the immigration minister. He says, "What Canadians are telling us, what economists are telling us, is that we have to dive into the microeconomic impacts of immigration." Of course, we've been talking about this in the Loonie Hour since we started, almost 2 years ago now?
Yeah.
Over 2 years.
Yeah.
Which is, we definitely need immigration, but 1.1 million people a year or whatever that exact number is clearly too many when you're exacerbating, a housing crisis and the ability to get medical treatment, in particular. So the infrastructure just isn't there. So, but the big story here is, like, when we talk about 500,000 permanent residents, again, the bigger issue for Canada is again, how did we get to 1 million people? Well, it's because there's no cap on international students.
You're right.
And so they came out this week and said, okay, we're going to make it the rules for universities basically pulling in some of these students. We're going to make those a little bit more stringent, but we're not going to put a cap on the number of international students that come into the country. So there's still no cap on that. So again, I think a lot of this is ultimately window dressing. It's kind of more or less pretending to do something, but not really doing anything about it. Hey guys, sorry to interrupt the show. I just want to remind you the Loonie Hour is going to be live in Toronto on Thursday, November 30th, starting at 6 p.m. The doors are going to open. It's going to be a live podcast, drinks, appetizers, laughs, good times. It's going to be so much fun. If you've ever been to any of our live events, I'm sure a lot of you can attest to that, but go check out our past live events on our YouTube channel there. You can check it out. Come meet hundreds of other Loonie Hour listeners. Come support the show. We'd love to see you there. There's going to be a link in the show notes below. Whether you're watching this on YouTube or listening to it on Spotify or Apple, there's going to be a link in the description which will take you directly to the Eventbrite page where you can purchase a ticket. Hope to see you there.
The other thing I think we often forget it. We always think about it from a Canadian perspective, and that's fine because we're Canadian, we live here. But I think it's important to consider this from the kid who's coming here perspective, where he's sold, a rotten bill of goods. Let's just say, for example, I mean, I've seen stuff on TikTok, people whose families scrimp and saved all their cash to access cash to send their kid, the great hope to go to this wonderful country with lots of opportunities. They sign up for as a student for international school. I won't even call it a university because some of these are just totally bogus. They pay all kinds of money and they're promised, everything. And the truth is that they don't have a good place to live. They can't find a decent job. And the school basically runs off with, money of this person who did not grow up in Canada, did not have a GDP per capita of, $40,000 or $50,000 or whatever it is. Maybe it might be a tenth of that. And so I think that's the other side of this. We often forget there's like a human element to this big lie, or maybe lie is too strong, but you know what I mean, Steve? Like there's another side of this that we sort of never really talk about. But
yeah, anyway, someone's got to pay into CPP.
I'm getting soft in my old age, I guess.
Got to pay into that CPP with Alberta leaving.
Yeah, that's right.
That's the this past week we'll get into as well what happened here in Atlantic Canada. So my wallet just got a bit thicker again.
Yeah, you're gonna be living the good life this winter, buddy. Fireplace is gonna be on.
I'm surprised you're wearing a sweater.
Yeah, you need to take that thing off.
We had our first snow yesterday, November 1st.
Wow.
Snow, Steve. Snow came down.
Early.
Yeah, all day. Yeah, it's still here. But with we always talk about everything moves in extremes. Think of a pendulum going back and forth. And I believe we've reached the extreme side to the left. Okay, not the right, to the left with a lot of these issues. And now they are starting to break at the seams. So, we were just talking about, Canadians are telling us that they want this or they want that. No, that's not true at all. Like you say, they're reading the polls, and the two parties that are controlling Ottawa right now, like they're getting mullered. They are losing it to the left and the right and up and down right across the country. So that's why all of a sudden they're responding to the housing crisis and they don't have a solution for it, of course. I mean, they're just they're now saying what they know, what they're being criticized for. So they're trying to take the other side.
Acknowledging what the complaints are anyways.
Yeah, and they're making it appear that, hey, we just discovered this, we're going to fix it. As opposed to what you pointed out earlier, Steve, to say, you know what, we actually created this mess in the first place. So I think, think now, right now, we're at the another extreme point. We'll talk about the, again, like I think I shared with you, I received my riding. It's the Liberals. They represent the riding that I'm in on a federal basis or perspective, I guess. And I got a nice questionnaire from them the other day. I had to rank the number, like all the things that were important to Canadians and me. And climate change is number one. Climate change, gender,
what?
ideology, sexuality, all these things these are the most important things to Canadians. And I'm reading this, I'm thinking, I don't think these are the most important things to many Canadians.
Okay.
Yeah, like we want to work, we want a happy life, we want strong school systems and healthcare, and otherwise, like leave us alone. So it's just ironic. Now this sort of leads into, and you're much better at describing what happened, Rich, from a tax perspective, maybe. But linking into the political side where the Liberals NDPs are now, they're losing a lot in polling. It doesn't mean that's what happens when they have an election. But here in Atlantic Canada, they did a panic pause, right? So Ottawa, we had the Bank of Canada doing a panic pause. The Federal Reserve, it seems like they may have done a panic pause yesterday.
Contagious.
I think the Brits did one. Yeah, everyone's doing a panic pause now. Now it's happening on the political side. So I'm teeing you up, Rich. What was announced this week? Or maybe Steve knows it better, because you, Rich.
Well,
You
Steve can tell us the announcement. I know the details on the energy market there. Go for it, Steve.
Yeah, sure. I'll walk through the high level notes here.
Wait, we need a drum roll. You ready?
Oh,
Can you hear that?
Oh,
no one can
what
hear
happened?
that, dude.
Yeah, put in a drum roll there.
It's better than my thumb snap is working better now.
Anyways,
What was the big announcement, Steve? What did one part of the country say? Oh, wow, it's awesome. And the rest of the country said, huh?
Yeah. So basically, for those that have been paying attention to it, the Liberal government, the federal Liberal government, of course, was planning to increase the carbon tax on basically, home heating fuels. So of course, Atlantic Canada, which predominantly uses oil for their home heating, was going to see a drastic increase in their home heating energy bills, which, at a time when the cost of living is, I think, front and center in almost every Canadian's life right now, there was naturally a lot of outrage and angst around it. And so ultimately the Liberal government folded like a cheap tent to the political winds, and they decided to put a 3-year pause on the increase of the carbon tax to only Atlantic Canadians, though. And so all of a sudden, everyone's
That's
going,
weird, Steve. Why would it just be for Atlantic
it's so
Canada and not
weird.
the West? Why is that?
Well, I mean, if you were listening to, I believe it was the economic minister, she was on a CTV news interview, and she says, well, if you want to have your carbon tax paused for 3 years, maybe you should vote for more Liberals and have your voice heard. So that's like literally what she said, like word for word. You can go check out the CTV interview. It was so people are seeing this and saying, hold on, just Atlantic Canada, and now your minister is coming out and saying, well, you should have voted that way and you would have also got an exemption, is of course creating a lot of political friction across the country. And so everyone's saying, well, hold on a minute, I use natural gas to heat my home. It's actually a cleaner fuel.
Well, yeah. Let me jump in there.
Yeah. So
okay?
Rich, you chime in, because I want you to get to obviously Saskatchewan's comments as well.
Well, yeah. So I mean, let's be clear here. So you said fuel, but there's different types of fuel naturally. There's coal. So 60%, just so people understand, 60% of Nova Scotia's energy comes from coal. So then next time you see someone driving a Tesla, just remind them of that. But the key thing here is natural gas as a percentage of residential heating in Canada is 46%, but that's all basically in like 5 provinces: so Ontario, Manitoba, Saskatchewan, Alberta, and British Columbia. And the reason that's important is because out east, it's sort of the opposite. Natural gas is basically zero, basically, or very, very low. So you have, sorry, I'm just looking at, yeah. So Nova Scotia is 4%, but basically PEI, Newfoundland, New Brunswick, they don't use any natural gas at all. What they use is fuel oil. So like it's obviously much, much thicker than kerosene, which would you use for jet planes, or gasoline, which you use for a car, diesel, which you'd use for a truck. So as you go up sort of the curve, you get the viscosity changes naturally, and it's different, used for different applications. So in the East, they use fuel oil. And so in PEI, it's like 50%. Nova Scotia, it's 36%. And these are 2019 numbers. You can find them on the Nova Scotia website. And so what they did basically was they put an exemption on the fuel oil, not natural gas. But the thing is about natural gas is that it actually has a much, much lower carbon footprint, has much, much lower emissions, which is the scandalous part about this whole thing. So it has nothing to do with environmental concerns, and is purely kind of a very, very cynical ploy. The other thing that people do a lot in,
but Rich, just to chime in, which
sorry.
comes back to the the survey I was asked to complete by my MP. He wanted to confirm that the most important point or factor for Canadians is climate change. So they're telling us the planet is it is just boiling over because of what's happening. That's why they're putting these taxes on everyone. Except now, conveniently, to get votes or to stop losing votes or to stop the flow, they're going to reduce this or pause this carbon tax. And again, I think that's why people, people will say, "Oh, you guys are getting way too political today." This is the country we're in. It's fractured because of the economics and the policies that are being put in place that are having this pretty significant economic impact on all of us. And it's now at the point where, there's really only one guy here in Canada. That's the kingmaker that controls everything. That's the leader of the NDP. And so, Mr. Singh, if you or your team are listening, we'd love to have you on. Come on and have a conversation and let us know why, you're keeping this together, because it's not looking very good right now.
What's remarkable is also just the number of people. So I'm not saying that you shouldn't exempt people who can't afford a particular tax. I don't think that anyone's suggesting that. And let's be clear here. Those Atlantic provinces are the poorest section of Canada. Maybe not Keith's house, but most of Atlantic provinces have the lowest GDP per capita. I would argue they probably have the lowest probably educational attainment, highest poverty rates. Who knows about crime? But those are important. And oil as a share of total Canada's energy heating is about 4 or 5%. So it's quite low. But the rank political element to what is a tantamount economic policy, to me, should be exposed. And the key thing for people who really genuinely care about climate change and reducing our emissions, right or wrong, I'm just saying, if that's what you care about, natural gas is absolutely part of the solution, Keith. That's why I brought that up, and I think it's sort of an important wrinkle. But anyway,
to expand on that point, right? So now, because you've got these the politics involved, they've kind of lost the argument in the debate. So just to give me an example, I've been following all these accounts that are very in support of the carbon tax, and a lot of them are from academia. And just reading even their reaction to what is just announced, because if you think about the argument from the liberal side, it's always been, well, we're putting more in your pockets, we're taxing you, but you're getting it back, and so the argument is that you're actually making more money. And I'm just saying this is the argument. Well, they're saying, well, hold on a minute, aren't you're just debunking if Atlantic Canadians would be getting more money in their pockets, would they not? So why are you pausing the tax? So he's kind of lost the narrative to sort of the mainstream voter, right? And then you've got these political people from other provinces, right? So of course Saskatchewan came out, the premier of Saskatchewan, he said, well, hold on a minute, we're Saskatchewan, we are incredibly cold. And we're also dealing with cost of living issues. Why are we not exempt? And we're using predominantly natural gas, which is technically, again, cleaner burning fuel. And so they've come out and said, as of January 1st, if the government does not exempt Saskatchewan as well, we as a province, because it's owned by Sask Energy, which is the energy, basically the natural gas is owned by the public sector.
Is it a crown corporation?
It's a crown corporation. So he's saying we are going to direct Sask Energy to not collect the carbon tax off of our homeowners, and we're not going to remit those taxes to the government. And you can come after us and sue us or do whatever you need to do, but we are not going to collect the tax, and we're not going to remit it if you don't exempt Saskatchewan. And so now people are probably wondering, well, why don't maybe other provinces, like let's say Alberta, also follow in Saskatchewan's shoes? The reason for that is that the energy or utility companies, whatever you want to call them, in Alberta, for example, are privately owned. So they can't necessarily like break the law and not have repercussions. So Saskatchewan is more or less on its own, but you can kind of see where this is going. All these other provinces are relatively upset that they're not being exempted.
And just to give
What
people
about the
again,
inclusiveness that was supposed to be created, to foster a culture of loving, and it seems like it's
boy.
going in the wrong direction here, guys. That's what I see.
just so people, sorry, just one last thing, just people know, it's like in Saskatchewan, natural gas as a share of residential heating is 81% as of 2019. I imagine hasn't changed much in 4 years. So if I'm wrong, I'm sorry. And then the natural gas, the oil share is 0. And in Nova Scotia, for example, it would be sort of the opposite. So you have natural gas is 4% and heating oil is 40, and etc. Anyway,
well, they're telling everyone they're going to give them free heat pumps now. So,
but plus, just there's one more thing. Sorry, the whole idea is to disincentivize people from using fossil fuels, if that is your stated aim. So it doesn't make sense that people would get cash back from a tax, right? The whole point is to make it more expensive, to disincentivize people from using a particular product. This is how all kinds of taxes work. Forget carbon tax, sin tax on alcohol or cigarettes or whatever it is. And so on the face of it, it's very difficult to understand that as your motivation, but maybe we should carry on somewhere.
Yeah, I think anyways, we'll carry on, but I think ultimately this has been like a very large political blunder that could have been handled obviously a lot better. And I think ultimately it is what it is. But Rich, I think this kind of leads to the next conversation though, which is I think we're seeing, as the economy starts to falter, cost of borrowing becomes more expensive. We're seeing some of the malinvestment come to the surface. And I think a lot of that, again, I think is for the right reasons, but, you're seeing a lot of issues with some of the ESG stuff as well. These wind turbine companies on the brink of bankruptcy, really actually seeking bailouts. I think was it Germany's windmill company there. They were asking the German government for billions and billions of dollars. Otherwise, they were going to cease to exist.
Yeah, well, it's to miss a lot of the, what is it, Warren Buffett's quote? Keith, you'll know this, like when the tide goes out, you know who's swimming naked, I think.
Yeah, you got it. Close enough.
Yeah, close enough, right. But I think the issue here with a lot of these companies is that their revenues are fixed. And in some cases that can be great, right? So if you're an energy company, you have a tariff and you fix the tariff for 5 years, whatever number kilowatt hour, and their funding costs at the time were very low because interest rates were low, etc. And so the business model was like pretty good. Like you understand what your revenues are going to be. You're basically guaranteed this revenue, let's say inflation adjusted or whatever it is, for 5 years. But your funding costs are very, very low. Now we're in a situation where those revenues are fixed, but your funding costs just went through the roof. And it basically, you're starting to see sort of more and more projects, whether it's because of a financing wall or just, because they're tied to the short end of that funding curve, become just not viable at all. But we have to be careful about some specific manufacturers of wind farms and then the energy providers. So that's like maybe a conversation for a different day. But the sort of project we're seeing, the ones that are failing, are the ones with like a fixed revenue base and the costs that are basically ripping because of higher funding costs, but it's also more expensive to transport the wind, to build the wind farms, and et cetera, et cetera. So that's, and I think we'll see a lot more of it. The company in Denmark that we were talking about, I can't remember how to say it, Ofsted. Maybe I'm screwing up the name, but they're actually a relatively profitable company with a solid balance sheet, but the loads of the projects that they've invested, they're just going to walk away from because they're not viable. Yeah.
So
And that
you're
sort of
seeing-
complements, I mean, the French reaction to all of this in France. Like they've quietly increased their focus on nuclear.
Yeah, of
again.
course.
Yeah, and it's easy to I'm very critical of the Eurozone for a number of different reasons, but for France to become even more invested and interested in nuclear power, that is the correct move for them. And I haven't heard, are the Germans now going to start trying to go in that direction, or what are they going to do? Because they have some challenges coming
Well,
up.
the Germans, is it last year or this year? I must be getting old. But anyway, they shut down 6 perfectly good nuclear power plants, and for that they should be shamed publicly, flogged even. But and they've been basically consuming a lot more coal, and they've been buying power from, guess who, Keith?
I don't know. What's the answer?
From France. They're buying
from France. Okay.
Which
That was
is
my
obviously-
initial response to no, that's way too easy. I know Rich is setting me up here for something.
Yeah, but anyways,
Yeah.
So yeah, it's just
But their
it's just
energy grids have to be connected.
They are. They're
cross-border.
totally connected. They're totally connected.
Yeah, absolutely.
But it's all
And
connected, like Belgium, Netherlands, and all that stuff. But those countries use a lot of natural gas. Like Belgium relies on natural gas and
So
nuclear.
what
but they're all
percentage
connected.
of France's electricity output comes from nuclear?
73.5%, depending on the year, depending on the time. It's very, very
Yeah.
high.
And
it has been
I assume
since
it's
the 70s.
always constant, correct?
that's-
I assume the
that-
flow
yeah.
is pretty steady. And okay, and what is the rest? I assume nat gas, maybe coal.
Yeah, there's a lot of natural gas. To be honest with you, I never even looked, because to me, France is just nuclear. That's the most important. It's been there since the oil embargo in 1973, because France has no coal. France has no coal, no gas to speak of, and no crude
So
oil.
if they're at 75-ish, for example, where are we in Canada? Because I assume it's Ontario. Like
We're
normally,
high. We're
right?
high. We're in the 20s. I can't remember. If you give me a minute, I can look it up.
So 20% of the Canadian grid comes from nuclear?
It's very high. Yes. It's something
And
like
what
that.
about
predominantly in
Americans?
Ontario, correct?
It's, yeah.
Yeah, so
Energy.
I mean, but that doesn't go to Quebec or
No, Quebec is
Manitoba,
like all-
Saskatchewan.
So in the east, it's coal. It's all fossil fuels. Not all, excuse me. It's in
Well,
the
not really.
60s.
Newfoundland is almost all hydro. Newfoundland
right.
is,
Sorry,
yeah.
but-
And I imagine Quebec has a ton of hydro as well.
Quebec, it's mostly hydro. It's like each section of the country has its own thing. So let's just say, for argument's sake, in the east, it's fossil fuels mostly. In Quebec, it's mostly hydro. In Ontario, it's hydro and nuclear power. In the middle west, it's, let's just say, for argument's sake, it's fossil fuels, and in the far west, it's hydro and fossil fuels.
So there is a solution, of course, as we've talked about before. But so maybe, you remember that pendulum that we were discussing here? Maybe that is going to start to swing, back again the other way. And so that is a positive thing to look forward to.
We do have a
Oh, so-
nuclear expert coming on the show, Rich, in a couple weeks?
Yeah. On the 23rd, we'll have Dr. Chris Kiefer, who's not a nuclear expert. He's, I would say, more of an advocate who's extremely, extremely well informed about not only nuclear power, but also the political sort of bullshit that you have to sort of go through and wade through in order to build, repair, refurbish, and expand our nuclear grid. And just so people understand, I made a mistake, and I'm sorry. Nuclear share as a percentage of energy is 5.6%, so much lower than I thought. I'm sorry, I screwed that up.
Ooh.
and then hydro, if you give me a second, I can find that. Hydro shares for Canada is 26%, which is actually much higher than I thought it was. And remember kids, hydro and nuclear are clean energy. Just so people remember.
But this gentleman, he who's going to come on and chat with us, he said he may not call himself an expert. Relative to me, he's an expert. This is going to be a great conversation. This will be a lot of.
I didn't mean to
we'll
like, put
learn a
it
lot
down.
from it.
the guy's very, very switched on. He's I think he's doing God's work. I mean, he's really
Well,
advocating for this as like a major sort of where we should go in Canada. Sorry, Steve, go ahead. Sorry.
Well, yeah. Well, I mean, we'll expand on his bio and whatnot, but I believe he's been testifying in the House of Commons here in Canada and whatnot on nuclear and whatnot. So, again, maybe not an accredited expert, but it's called what it is. He's an expert. He's a smart guy in that space. So we'll be having him on in the next couple of weeks. But
I can't wait. It'll be great. And by the way, if people want to submit questions, I think that this is an opportunity to do so. Because I think it's just so misunderstood. Sorry, Steve.
Yeah, I mean, it's just going to switch gears here as well. Want to get it in the back half of the show, but on really what's happening now, Keith, in financial markets. So we know the political hot mess, which is Canada right now. We know what's happening. We've discussed that, but in terms of the financial market aspect of things, last week we had the Bank of Canada panic pause, the ECB panic pause. We've now had the Fed and the Bank of England this week also seemingly out with panic pause. Keith, I'm sure you followed it along closer than I did, but it seemed like a dovish hold from Jay Powell at the Fed.
Yeah, he was sort of in line with everyone else. That's what it seemed like. If you're a central bank groupie, you always hear what you want to hear. And then that's the way it is, right?
Am I a central bank groupie? I guess so.
Oh, I am. I totally am. I'm groovy. But you tend to hear what you want to hear. And so, two people listening to Powell yesterday, you both walk away with a different message or, summary. And then you see which way, markets have reacted. And, I'm not a believer that markets are efficient. That doesn't happen. But the overriding message yesterday, when you read the media today, was that, the Fed is indicating that they're probably not going to hike anymore. They could be finished. And that's what markets were pricing in before the meeting as well. So to have him, suggest that, remember, it wasn't explicit, it was implied several times. And plus, when you overlay on that, see, we had it hasn't been a great 2 months for financial markets. People have been selling almost everything. So all of a sudden, you get into this mood. Hey, it's a good bounce here right now. So money came back in. One thing, but to be objective with it, what the Fed did say, I remember one of the questions. By the way, the worst to be in the press room for the Fed. It's a pretty important deal to get. No one can just arrive. I don't think the Loonie Hour can get in if we asked. Maybe if we dressed up nicely, Rich. No.
Do you think we can make the BOC? Genuine question here. Do you think we could make the BOC media presser? Anyway, sorry. Keep going.
Here comes the Loonie Hour.
Not after our call. Yeah. Question number 88 this afternoon. No one is listening anymore.
Question from the boomer of Loonie Hour Media Inc.
The New York Times, I think they had the third or fourth question yesterday. And the reporter from the New York Times effectively asked, do you plan to raise rates during the December meeting? And I burst out laughing. I'm like, come on, you didn't really ask that. You get the fourth question of the presser, and that's what you come up with. You're asking the chairman of the Fed what he's going to do for the next meeting a month out. And if he was drinking milk, it would have been that GIF or GIF. I never know what you guys call it these days.
GIF. It's a GIF.
It's a GIF. This was a gift yesterday. Anyway, the lady, she's drinking milk and she bursts, she laughs and it goes everywhere. That's what Powell would have done. And, he effectively said, we haven't had the meeting yet. We don't know what we're going to do, during that time. Anyway, but the other part,
I like this guy.
Another great question. It's a guy, I think it's Leisman. Steve Leisman, I think his name is. He's with CNBC, I think he is. He's trying to get the, is the Fed leaning more towards hiking or cutting rates? He boxed him in. And I didn't like the question because, you're trying to be one of those, I want to create one of those gotcha moments. for and that's not fair as well, to the.
What was his response?
Well, he's come back and then he made it very clear. He said, we had no discussions about cutting rates. Our discussion is whether to hold or to raise rates. That's where we are in the cycle. And that's what I took away. I said, oh, wow, when that happened, I said, hey, like that's a pretty strong statement. So I guess the overriding statement, though, what was heard, everyone is saying, hey, we're probably more on the, as Steve coined it, I think, the panic pause, maybe. But just to, as well, even though a lot of the American data is getting a bit softer out there, there's still a lot of reasons to have that the Fed, they could do another hike here coming up. But again, you have to wait for things to sort of, flush through the system here till we have an impact. But that was the big, event yesterday. So we've had 2 days now where it's like party, like it's 99 again. And so people, it's our view that this is one of these, little euphoria bounces. And maybe by tomorrow, because this is Thursday, so Friday for everyone here now, maybe we got to get back to this thinking or belief that, okay, if rates are not rising anymore, the next thing that, the world has to deal with is two things. And they're both, one sort of leads into the other. One is rolling over debt. So reinvesting debt that's maturing, need to roll it over at a much higher rate, of course, which everyone's familiar with. And then also the prospect that it's not a soft landing. So if we do go into a recession of some kind here, then that is going to that will overwhelm the system as opposed to the conversation about, what is the Fed going to do. How about you, Rich? Did you listen to the presser or read the notes?
I'd read the notes. I didn't listen to the presser, sadly. I would have called it like a hawkish hold, which is sort of I think it's funny to contrast the BOC that held and was hawkish, but that's just fluff, versus what they did in the Bank of England, also held rates, and again they were sort of hawkish hold, but again it's.
Can you say that with a British accent?
Hawkish
hold. I love it when there you go.
Yeah, that's pretty good.
That's good. Yeah.
And oh god, I lost my train of thought. Anyway, versus the Fed, which I think is a hawkish hold in the sense that they actually sort of mean it, and I think that so that was where I sort of saw that's the sort of the difference, I think, for me. However, but as I say that, and forgive me for talking sort of out of both sides of my mouth, that being said, yesterday we got some really negative data from the ISM, right? My favorite, the diffusion index for manufacturing fell more than expected.
Did you talk about the diffusion index at the
on my date?
Yeah.
I didn't. I probably should have. I promised if it works out next time, I will.
He saves that for the third date.
That's right. That's my closing move. No, I did not talk about the diffusion index, but I think that's there's just more of these data points.
You're going to close with the diffusion index conversation?
You don't think that'll work? You don't think that'll work?
If it does, it's brilliant, because it wouldn't be expected. It'd be one of those, wow, I didn't see that coming. Because most other moves, so you can see them coming a mile away.
Anyways, but yeah, so that was I don't know. I'm totally lost out. Steve, save me.
Yeah, Frank there in compliance is not going to be happy. But yeah, I mean, Keith, it seems like the bond market's reacting. Of course, I always follow the Canada 5-year bond. That's down 40 basis points over the last couple of weeks. So it's been
serious.
Yeah, it's a big move. Now sub 4%. I mean, we touched 4.4 at one point there. And so the market seemed to be getting, retracing a lot of the move recently. Interesting enough, you had Stan Druckenmiller out a couple days ago, torching Janet Yellen for not issuing enough debt on the long end of the curve.
Oh, really? We've talked about that.
Yeah. So, well, I mean,
we've talked about it, but we've talked about it for Canada. I know he doesn't.
He didn't call out Christopher. Yeah, exactly. He didn't call out Christopher Freeland for doing the same thing. But basically, Druck was like, "Listen, you had an opportunity to lock in, 10-year, 30-year debt at 75 basis points, and you issued it all on the short end, and obviously so he chirped that, and he's got a huge bet now on the short end, Keith.
Mhm.
On the two,
It's
I
sort
believe
of in line
on the
with
2-year. I believe on the 2-year coming down.
Yeah, I think there's a lot of interesting things happening within the plumbing of the U.S. system. So the plumbing of the U.S. system, it's deep, it's enormous, it's friggin' complicated. It's not like the Canadian system, or Europe is fantastical, I guess you can call it that.
Oh god.
But there are some signs now within the U.S. system that it is getting a bit peculiar there. So we'll have I'll have some more details on that for the next podcast when we go into it. And so again, like looking where yields are, that's just the headline number. Underneath there are some big movements taking place. So I was just introduced to some of that earlier this morning, and we'll go a bit deeper into it as we move along. But the other interesting thing, I'm bearish on the emerging market world. You guys know that, and it's been pretty correct now for this cycle. But there was an interesting article out from Ken Rogoff. So Rogoff, I think, is he from Harvard?
Oh, it's Rogoff and Reinhardt. Those people?
Yeah, that's his Reinhardt is his spouse. I think this
Rogoff
one
wrote the book. It's Never Different This Time, I believe. Is what he's got. It's Never Different This Time.
Keep going, Keith.
Yeah.
I'll look it up.
Maybe he used the diffusion index as his pickup line.
Well, his
for
wife
Carmen.
is I think she's also an economist.
Yeah,
so you never
Carmen
know.
Reinhardt. Yeah, Ken Rogoff. They usually write, but this one he wrote it on his own. He wrote the entire article was just him. His spouse did not help him.
She was
I don't
loving the
believe that.
diffusion index.
These are things you get to look forward to after you have
Yale and MIT. He works for Harvard. Yes.
He went to
So
Yale.
not a dumb guy.
Yeah. He had a piece that came out I think it was this morning or yesterday. It wasn't a deep conversation. It wasn't an in-depth article, put it that way. However, he was talking about the emerging market world. And one of the comments he made was that one of the things they did when they issued a lot of debt back during the pandemic when rates were really low, they did go long-term. So they would have had short-term as well, on their term structure, but they put a lot out further on the curve compared to what the Canadians did, and what Druckenmiller just critiqued Yellen for with the Americans and so forth. They didn't go as far out as the Austrians, of course, but they did go out further. So if people are watching this on the YouTube now, like Rich is like head first trying to find the article. Steve doesn't give a shit, and I'm just filling up the dead space.
No, I wanted to make sure that because Carmen Reinhardt is not married to Ken Rogoff. Sorry, they're not a couple. Just for the record,
Not a couple.
You don't think they've ever hooked up?
Oh, I'm sure they hooked up. I'm just saying they're not like a couple according to Wikipedia, and Wikipedia is never wrong. So that's the end of that.
I thought they were. Maybe that's interesting.
That'd be a power couple.
That would be a power couple. Well, Janet Yellen's husband is like a super economist. He did the lemon used car theory. I think he's won a Nobel Prize in economics
I'm less interested in that relationship.
What kind of jokes would they play on each other, do you think? Would it be these jokes that no one else would get?
I have a joke. I'm going to date this guy. I'm going out for dinner. It's transitory or something like that. I don't know. There's a joke in there somewhere.
Okay. Well, you know what? I think this is a good place to wrap it up. I'm going to have to put an end to this. But yeah, guys, seriously, the Toronto event, November 30th, would love to see you guys there. Drinks included, first drink, I should say, appetizers, live podcast, Q&A, pictures, come ask questions, hang out.
Musical band.
It's always a great vibe. We've got some truly awesome listeners here. So looking forward to meeting everybody in Toronto on November 30th. And as always, we'll see you next week.